So the floor is yours now.
Thank you. So hi, my name is Jason Nurse. I'm an assistant professor at the University of Kent here in the UK, and I also have a number of visiting roles at other universities, including Oxford and Cranfield. The title of my talk is, or rather the focus of my talk is focusing on the topic of cyber insurance and really trying to understand the data that actually drives cyber insurance, especially when it comes to the underwriting and the cyber insurance claims processes. Right, so to probably kick off, I just want to highlight the fact that cyber insurance and this, I guess the more broad topic of cybersecurity is quite significant. One of the reasons it's significant is because we have the reality that, as you can see in the quote here, there's the reality these days is not that a company may get hacked or a company may get breached or a company may get exposed, but there's this kind of question around the eventuality of this actually happening. And in this quote, we kind of see, I'm convinced that there are only two types of companies in the world, those that have been hacked and those that will be. And even they are converging into one category, companies that have been hacked and those that will be hacked again. And the nature of this is really to kind of emphasize the reality that cyber attacks are with us, and you know, they're going to hit organizations, individuals, you know, quite a bit, and they have in the past. So then we have this kind of topic of cyber insurance. And of course, the first question is, well, what is cyber insurance? What part does it play? So one definition is provided here, which basically looks at the fact that it's kind of almost an avenue to share or transfer risk, especially when the risk that companies may face when it comes to engaging online or using online services. Now, there have been a number of studies mentioning cyber insurance that focus on what it is. The one that I want to pull up, and this is not actually a study on cyber insurance, but it is the kind of the UK Cybersecurity Breaches Survey, the 2020 version. And in that survey, one of the questions posed on cyber insurance. And it kind of highlights why companies are actually picking this up, why companies are deciding, okay, you know what, cyber insurance is maybe something that I want to look at, something I want to consider. One of the first ones, or probably the most popular one, is this idea of legal support after a breach. So if a company incurs a breach, they will actually get some support in responding to that breach. You also have kind of insurance against lost profit. So for example, if there is significant downtime, an organization needs to kind of bounce back, and they need to basically cover the cost of lost revenue for the time where they were down in trying to respond to a cyber incident. There's some insurance that may cover that, insurance for data loss and other things. So we can see that the kind of avenue that cyber insurance is trying to fill is this area where companies, maybe they have been breached, and this allows them to kind of almost get back up on their feet or to protect the business in the event of a cyber attack. Now, right. But the reality is that even though cyber insurance has kind of increased a bit in popularity, and you know, it potentially could be extremely beneficial, because the reality is that if it provides all of those things that I mentioned in the previous slide, the reality is that that could really, really help companies. But one significant issue, one thing that we're finding, is that cyber insurance itself actually has its own issues. So here we have kind of two separate studies on the screen, which basically talk about the factors and highlight some of the factors which is why companies aren't buying cyber insurance. One of these factors is the cost is simply too high. So companies are viewing cyber insurance as simply too costly. Another one is coverage limits are too low. There's also looking at standalone coverage versus kind of integrated coverage. And then on the other side, looking at kind of the top reasons why companies haven't purchased cyber insurance, we have to see issues which is, you know, not a top priority for my organization, lack of budget, lack of knowledge about cyber insurance. And these are some of the kind of key trends that we're seeing come back out time and time again and across a number of different studies. So in general, what we try to focus on in this work is actually trying to drill down a bit in understanding, okay, the cost is too high, lack of budget, lack of knowledge. What are kind of some of the issues here? And we're trying to target some of these issues and shed more insight into cyber insurance, what it is, what it involves, and in particular, what data is being used to guide practice of cyber insurance. So there are kind of three main aims that we focus on in the context of this research. They're kind of stated here. One is to basically try to demystify or kind of simply identify the types of data used. And this is particularly useful because if individuals more broadly have an understanding of the data used, people can try to build approaches, platforms to gather this data better. Related to the second point, we can actually have this idea of looking at the gaps. So basically where insurers think, oh, it would be really helpful to receive data on X because this would help us better underwrite risk or better plan for claims, in terms of playing out claims or processing claims. So there's a question there about the gaps. Another topic is this, looking at the final topic is this idea of exploring what we consider kind of a pre-competitive data set. Now, this could be quite beneficial simply from the perspective that, well, cyber insurance these days is still very, very new. So if we can, we as an industry, let's say, can get together and determine and basically come together and kind of create this kind of data set that can actually be used to better inform underwriting, writing policies, actually processing claims and responding to claims, then overall, the cyber insurance market could actually stand to benefit quite significantly, potentially. So we were very interested in these three key topics. Now, the methodology we adopt is kind of laid out here. So we decided to opt for a focus group approach. Now, focus groups are simply, when you get together different groups of individuals, especially on a particular topic, and basically get them discussing a particular topic and answering a number of problems. Now, one of the benefits of focus groups is that it allows individuals to engage off each other and kind of build on each other's points or even contradict or discuss things themselves without the interviewer actually kind of guiding discussions completely. So we engage with 13 individuals, 13 cyber insurance professionals. We have 3 underwriters, 2 actuaries, 2 claims specialists, 2 cyber training specialists, breach respondent specialists, and also 3 cyber operations experts. So those were kind of the individuals that we had present in our focus group. The focus group itself was actually held in London, the UK. But the key thing about this is that we had individuals that actually kind of were involved in underwriting policies across the world. So we didn't feel that, of course, even though they're in the UK, we didn't feel that kind of was a major, let's say, limitation of this work, because we do believe that these individuals had, quite a bit of a large remit. The focus group lasted for about 90 minutes, and it was conducted in London because that was much more, that was the most convenient location for the individuals. So now I gave you a kind of brief lead up to this topic. I just want to delve into a bit more detail now on the results and discussion. So 4 main points I'll focus on. The first one, kind of what data is used to decide whether to underwrite a risk or not to underwrite a risk. Then looking at what gaps actually exist in data gathering, particularly when it comes to underwriting. And particularly what the question we're trying to answer there is, what do insurers still want to know? What could actually be helpful to them in creating better policies, more targeted policies, more kind of better premiums, therefore that potentially companies will view these premiums as not too high or the cost not too high, and therefore potentially buy into cyber insurance. The fourth topic is basically looking at what data is gathered in the case of an insurance claim. And this is interesting as well, especially from just shedding insight into what data is actually being gathered. What data, do cyber insurers look for when it comes to claims? And the last one, basically exploring once again this topic of a pre-competitive data set, in that, is this something that individuals will be keen on? What is their opinion on it? What's their knee-jerk reaction? What do they see it? How do they see it benefiting? Are we kind of right, or what are their opinions? So, to delve into that in a bit more detail in terms of the responses, in terms of the data used to underwrite risk, the first type of data that kind of jumped out quite quickly was this idea of business data. So respondents were very kind of quickly to point out size, turnover, headcount. These kind of things were kind of key when it comes to the individual and, well, the company, and trying to understand whether to underwrite this risk and also what premium or what policy to underwrite it for. Then you also had kind of delve in a bit more detail. Size was interesting because, of course, this is obvious because this relates a bit to turnover. That kind of makes sense. Probably one of the ones that kind of jumped out to us was this idea of headcount. And headcount there was not necessarily just looking at the amount of people. It was trying to look and say, okay, well, if the organization has this many people, then one might make inferences about how what's the level of exposure in terms of, let's say, the human exposure, in terms of exposure of maybe clicking the wrong links or social engineering attacks and so on. Now, the other area was security data. Now, security data or security related data. So for instance, did the company have a CISO? Did the company actually engage in any cyber training operations? And also who received that training? You know, were the most appropriate people in receiving this training? Focusing on, I think the CISO was an interesting one, and not from the obvious perspective, but it was especially from the perspective that, you know, whether the company has a CISO or not, in kind of already highlighted whether the company was potentially taking security seriously. So that was really, really interesting. And then also they looked at, or they mentioned security controls, security setups, but then also kind of intangible factors also mentioned in terms of how clients responded. So not just the response that was given, but how that response was communicated. And that was key because it highlights there's a number of intangible factors that also go into this process. Then of course, you also have this reality of historic data. In that breach history, insurance claims history, these are kind of natural things that you would expect actually to influence an underwriting decision. Now, here are some quotes really quickly that we thought were kind of quite key. The first one basically kind of highlights the fact that it's really often comes down to kind of a commercial trade-off, in that you don't want to ask too many questions as an insurer. You don't want to ask too many questions because you might, let's say, almost scare the company away, but you don't want to ask too little questions such that it comes back to you underwrite a risk that actually turns out to be a bad risk. And the second point kind of once again ties into this kind of unquantifiable element, in that the reality is that when it comes to engaging with organizations, that sometimes the quantifiable bit is almost, or rather the unquantifiable bit is almost as important as the quantifiable bit. So that's also quite interesting. In terms of the gaps when it comes to underwriting, in terms of if you focus on business data, what insurers kind of highlighted quite clearly was there's really a big gap in the plans for the coming year, in that companies are seem to be a bit shy in kind of explaining what they plan to do in the coming year. For example, do they intend to engage in any major IT migrations? Do they intend to potentially purchase any other companies? And you can see you can probably guess some of the reasons why companies might not want to do this. But either way, it kind of raises a lot of questions around the business data and what insurers would like, but what companies maybe are not so keen on doing, on providing. And then also you have this point about kind of processes and kind of business dependencies. That's also quite important because companies want to know more about that so they can identify things like systemic risk across their portfolios. And at the bottom, we have just a general quote once again that highlights this idea of what insurers wanting to know more about what's actually happening. Security data once again came up when it came to gaps in terms of independent assessments were kind of quite valued when it came to an independent penetration test. Not only knowing that companies actually have backups, but how they are maintained and tested and implemented and how backup processes are rehearsed. And then also trying to focus on understanding the effectiveness of controls and not just that a company has a control. That's also really, really important. At the bottom there, you kind of see a really kind of key quote that someone highlighted in that, you know, it's really about the effectiveness of controls. It's not about just having a control, because you need to be able to kind of delve down into a control might exist, but it might not be, a control might exist, but it may not actually be terribly helpful. So the next point, kind of moving on quite quickly, is this idea of insurance claims and trying to understand what insurance claims specialists actually look for. Now, from their perspective, they're very, very interested in kind of almost any business data, but of course, particularly security data. Now, what kind of came up quite quickly as compared to, let's say, before when it came to underwriting, is that in the event of a claim, insurance organizations seem to be able to get and access much more data. They're much less restricted rather than initially at the kind of initial underwriting process. And of course, this is somewhat logical, because the reality is that companies want to get the payout if a breach has happened. So they're probably much more likely to share more information. And at that point in time, the insurer, of course, has to make this decision of whether to pay out on this claim or not. Now, one of the challenges that we identified there, however, is the reality that existing systems are not perfectly tailored to actually being able to address and basically to kind of access and to store this variety of data. So what we recognize is that in a lot of the cases, Companies had to actually be storing this data maybe in PDFs or in text files, and this was, of course, not very searchable, not very useful, which also makes doing any kind of more large-scale analytics on it practically impossible. And you're going to see a quote here, once again highlighting the reality of this issue. So the last point I wanted to mention is this idea of the pre-competitive data set, because when we approached this, we really thought that the cyber insurance industry is quite new. It almost makes perfect sense for insurers to kind of join together and partner together and to try to develop this pre-competitive data set such that all the insurers would benefit. They will be able to underwrite risk better. And then this of course, this hope that, you know, if companies actually take on cyber insurance, then potentially they'll improve their cybersecurity processes and procedures. And then, of course, everyone kind of benefits. That's kind of the grand plan. Now, when we actually kind of delve into this, what we found was that insurers actually weren't particularly happy with this idea of a pre-competitive data set. And the primary reason for this was competitive advantage, in that the cyber insurers that were already in the market, that were kind of there, they were more keen on solidifying their positions as market leaders than actually kind of contributing or building a pre-competitive data set that could then actually level the playing field and basically ruin or upset their competitive advantage. As the first quote here says, kind of as a cyber insurer, you've taken the risk to build to where you are. That's your intellectual property at that point. That's your competitive advantage. Or the second one is general economics, the first adopter or first mover advantage. So this is what we found kind of come up quite quickly, in that it was a very, very strong, no, this is not going to work. No, this is not what we want, because potentially it could be this reality that, you know, a market leader is not really keen on giving up their position, even though the cyber insurance market is so new. So this was a very, very interesting finding, which of course has implications for anyone else looking into building or constructing a pre-competitive data set. So just to summarize really briefly, this academic work provided new insights into various types of data used within cyber insurance, particularly when it comes to policy underwriting, the policy period, and also the claims process. We also identified a number of gaps that kind of insurers perceive exist when it comes to data gathering. And we also investigated the feasibility of a pre-competitive data set in the cyber insurance industry. What we're kind of looking potentially to do in future work, or one or two key avenues. One is to kind of look into maybe large-scale surveys of cyber insurance practitioners, and this would actually try to address the limitation of you know, the fact that we only looked at 13 individuals, and you know, there might be potential bias there. And then the second one was potentially building models that utilize data points covered, because one thing that our article has done is really kind of demystify and identify a number of key data points that are used actively within cyber insurance underwriting and the policy period. And also when it comes to claims, that could actually inform a lot of follow-on research when it comes to building appropriate kind of data and models and data sets. So thank you very much for listening. I should have also mentioned that this work, of course, was done in collaboration with a number of amazing colleagues. But yes, that's all. So thank you.
Thank you, Jason. Fascinating presentation as always. Just a reminder for attendees, if you have any questions, please use the Q&A at the bottom of the screen. Just to start, it's quite surprising, right, that cyber insurance, they always complain that they don't have data to drive their reasoning, but at the same time, they are not willing to share it. So,
yes, sorry, go ahead.
No, go ahead, please.
No, I was just gonna agree in that it is a very tricky problem. I think the reality comes in where because you have this idea of competitive advantage, in that the reality is that there's probably a lot of money to be made in cyber insurance. It's a significant field. There's a lot that could happen in it. So for the organizations that have invested quite heavily in making these relationships, engaging with others, and following through, and building these appropriate models, they're potentially not very keen on giving that all up in the context of a pre-competitive data set.
Mm-hmm. So Drew is asking that, is there any precedence of a third party on pre-competitive data set which can then be used by others?
I think, although I'm not 100% sure, I believe that potentially Advisen has a data set of some sort, but so in theory they're a third party, so that might set some precedent on what cyber insurers could use, and I'm sure that probably other number of parties actually investigating that, but it probably is, at least in the short term, the way how things will go. I guess the only concern in general would be how accessible is the data set and who builds it and how they ensure it's clean, appropriate, and so on, and basically accurate.
Okay, there's another question from William. It says, is the GDPR breach insurance treated separately from the insurance against other risks?
This is for insuring potentially against a GDPR breach, a fine, sorry.
Yeah, I mean, if they are treated separately.
The fine in particular, I just want to clarify that.
Yeah.
I'm not sure actually. This is something that I've seen that it seems to be a little bit unclear, because I've seen some work saying that basically the fines from GDPR are not covered under some policies, but I've seen also other articles talking about they are. So this seems to be an interesting area to see what's really the truth there. And even when it also comes to, because another ethical question, of course, is whether it is ethical for cyber insurers to pay ransoms from ransomware, for example, for companies. So there's a lot of interesting stuff there that could be explored, really. Thanks for the question.
So probably last question. Check it. Do you think that, given that your study mainly involved the London market, is representative of what's happening in the rest of the countries?
Yeah, so this is a valid question, I think one way, and this is a valid question that I mentioned during the talk, and the reality is that it's we can never claim that this study is representative of the entire world. In some regards, one might even say that one needs to be cautious whether this study is completely representative of the UK. But the reality is that in focus group type research, it gives you the ability to delve down and to kind of explore a topic in kind of great amounts of detail, which is what we did here. But then also the reality is that the cyber insurance market and the individuals that we interacted with, they underwrite policies all over the world. So it's certainly not a scenario where these individuals are based in London, only underwrite policies in London, and don't see the variety of stuff happening across the world. So a number of the individuals in the studies, regularly engage with the US, regularly engage with South America, with Asia. So there's a wealth of experience that they brought to the study, which we think is actually quite useful and quite important. So I would also say that it shouldn't be discounted because they were London-based professionals.
Okay, great. So there are no more questions. Thank you very much, Jason.
Thank you.
And I think that we can move to the next speaker if he's ready.